Baltic Dry Index rose for a fourth session yesterday as demand for iron ore strengthened. The index, which is a measure of commodity shipping costs, rose 98 points or 4.6%. And to talk about the index and what it's telling us about commodity prices going forward and demand, we're joined by Bevan Jones, commodities analyst at RMB, and Arnold Werbeloff. He's industrial transport analyst at Kagiso Securities. Gents, thanks for coming in. Bevan, we had Chinese trade numbers out yesterday and they showed a smaller than expected rise in imports for the month of July. So does it come as a surprise that iron ore imports into China continue to rise?
No, I don't think so. I think the iron ore demand is there, and that's certainly been reflected in the spot price. However, I think it is a bit muted now, and you're seeing the forward market in iron ore certainly trading more into sort of a backwardation. But China's not going to stand on their own. I mean, they're going to do whatever global world demand is doing, and in general, it seems that people are feeling a little bit cautious now.
So do you think we've been spending too much focus on China trying to pull us out of the global
I've always said
China's demand for commodities?
China's not the super country that can just pull us out of everything. It needs to be the US, Europe, everybody.
Arnold, just looking at China's role when it comes to ports and also the Baltic Dry Index, what is your view? Because we know that China has for some time now been buying strategic investments in various countries. You know, Greece was one of the most recent. We know that they're also very much involved in the ports in Italy.
China's got a strategy to buy into assets at good prices, which allow her goods to get into Europe, for example, Greek ports, and she signed 14 agreements with the Greek government recently in June, and it's quite clear that she will continue buying up assets and buying up piers and revamping facilities in Greek ports. She's in Africa buying up coal, but then India is also looking at buying up coal mines in Africa. I think this is part of a global strategy. As far as Greece is concerned, there's a particularly warm relationship between the two countries, and China would be building tankers for Greece and chartering Greek ships.
How is this going to impact the Baltic Dry Index going forward, given that, I mean, we know that in terms of the largest fleets, it comes from Greece, and if China has strategic investments there, that's also it's quite an interesting synergy that we're seeing happening.
Yes, I think it's a logical synergy. China has 30 to 40% of the demand for certain commodities in the world, and growing. And Greece has got the biggest fleet, so there is a synergy. Also, China has to get its goods into Europe, and they see the port of entry as being Greece. That'll be the way to go.
Bevan, does this tell you more than China just trying to get commodities into its ports and its imports into Europe? Or does it actually say that China's trying to tap into global trade, so not just its own trade?
Well, they certainly have to play by the global trade rules. And I mean, China was obviously building a huge amount of ships when freight prices were peaking in the middle of 2008, and the Baltic Dry hit, I don't know, 12,000. I think what's happened is obviously the freight market at that point was trading in strong backwardation. I mean, people knew that the freight market was going to collapse because of this supply of ships coming on that were being built in Chinese ports. Those ships are now on the market. They are just ballasting. They have no cargo to. It's not really an indication of where the global supply and demand situation is. It's just that there are too many ships out there at the moment.
So do you see that balancing out, supply and demand? I mean, we know that when things went all pear-shaped, we saw a lot of ships being taken off, getting goods around on a global level, and now we're starting to see them streaming back in. I mean, is that going to balance out going forward?
I think it's already balancing out. I think utilization is over 90% on the dry bulk fleet. On tankers, it's over 85, 86%. And supply and demand are both increasing for these ships. And the fact is that recently a company called Precious, which is second biggest Thai dry bulk operator, they said they're going to place orders for 23 ships, but they're hoping that the Baltic Dry goes down to 1,500 or less for a quarter or longer, and then they'll start buying up assets. We could also see companies like Grindrod doing something similar, but hasn't gone to those numbers. It reached the bottom recently of 1,700. It's recovered 30% to 2,200. And the Capesize is very strong, especially in the last few days. We've seen 2 days ago it went up 15%, the Capesize index. And those rates are starting to look quite profitable.
And of course, it's the Capesize vessels that are transporting that iron ore around, so some of the other vessels' rates wouldn't be going up to the same extent, would they?
No, they aren't. But the point is that Capesize was a big worry, that there'd be a huge oversupply at the high end. I don't think that's going to happen. I think demand is still there in the global economy. I think if you look at the industrial production growth rates for America, for Japan for 2010 and 2011, they're definitely enough to support China in this. If you look at Japan, it's about 20% growth industrial production this year. This is huge, the second biggest economy. So yeah, it's not only up to China.
Earlier you were saying, yeah, exactly, it's not only up to China, but looking at the imports into China, up around 22.3% for the month of July, much lower than most had expected. And we are talking about the Baltic Dry, we're talking about iron ore consumption. At the end of the day, perhaps we've seen the restocking happening. Do you think that things could stabilize from here onwards? In other words, taper off, Bevan, or do you think that...
I think the Chinese are very clever traders. I mean, they certainly look to buy the dips, and we've seen that. And with all the developments in the iron ore spot market, I think the Chinese are very much on top of that, and the government has been involved in negotiations there. The one thing where the Chinese are very lucky is that they do tend to own their own ships, so they're not necessarily subject to fixing agreements in the forward market. So, for instance, they could come and load coal out of Newcastle, but if they decided that the queues at Newcastle were too long, they could simply come to South Africa, because that incremental is not going to cost them a lot more. They own the ships. So that gives them a certain advantage in the market. Yeah.
Of course, do you think we'd expect to continue to see this volatility perhaps in the Baltic Dry Index, because China is really only going to international markets for iron ore when those prices are lower than its domestic prices, isn't it?
Sure, I think we'll always see volatility in freight. It's one of the most volatile markets in the world, and as we've said, the utilization rates are certainly picking up, and we are starting to come into that supply-demand balance now. And it's an incremental supply-demand. When you get a squeeze at a port and there's vessels queuing at Newcastle, for instance, and you can't get that spare ship, that's when you start to see squeezes and jumps in the market.
What's Russia's role in all of this? Because we know that they've banned exports on grain.
It's going to help other countries who are trying to ship, apart from the Greeks. For example, if grain was going to go from Russia, that would change the pattern of trade. Now you could find that some of the smaller size ships are in demand rather than just the bigger size ones, and shipping further distances from all over the world rather than just Russia. So.
Of course, you're fixing rates on those ships quite far into the future, aren't you, Bevan?
Well, you can. I mean, obviously, you have a freight forward market where you can lock in rates into the future. And if you look at the curve in the freight forward market now, it's fairly flat. So people expect things to actually tick up from here. It's no longer trading in that backwardation. But it's interesting. I mean, those freight rates are on just liquid rates. The India market, South Africa, India, there isn't really a freight rate that you can trade. That's very much fixing with your counterparty on a derived rate yourself. So it's difficult to just take the Baltic Index and see it as a proxy for every single freight rate out there. For instance, you might get a squeeze in Indian freight rates.
One of the things that is quite interesting when it comes to the Baltic Dry Index, and when it fell off a cliff, when we saw things really coming under pressure, many say that it could be a good indication whether we could be heading into a double dip scenario or not. Do you think that is a fair comment to make, Arnold?
No. I don't think that just because it goes down 20% or goes up 30%, that we can say we're going for double dip or anything.
Because it's supply and demand depending on the ships.
Yeah, it's very volatile. It can go up 80-90% or down 80-90% in 2-3 months. It's done that before. So we've got to watch it. I don't think that you can say global real economic activity is a function directly of what today's rate is, but it does tell you at the first stage of production what is happening at rates, at rate level, and it does tell you also about credit markets, because a lot of shipping is done according to credit, so it's a very good indicator of what's happening in the world financial scene. Also, when you see a collapse in the dry bulk market, then you start to say, where's the shipping finance? Because if it carries on for any length of time, like we saw in the real crunch about 18 months, 2 years ago, then you see shipping finance disappear. We're not seeing that now.
And remember, the Baltic Dry is really just coal and iron ore from a few specific routes. I mean, you've obviously got wet freight rates, which is your oil tankers, etc., and then you've also got your containers, etc., and you've got the Harpex index for container freight, etc., and that's also ticking up.
All right, I'd like to touch on the fact that China has a lot of agreements with various ports around the world. We know Italy and Greece being one of them, and we mentioned it earlier. What is interesting to note is that counterfeit goods are making their way into Europe and various other countries. So it's quite interesting that this is happening. So various trends are emerging, with China having a role to play not only in Africa but various other economies. What is the role of China going to be going forward? Just your last view, because I mean it's a very contentious issue, I would say.
My view is that you're always going to get counterfeit goods, and I think whether China's involved shipping them or somebody else is involved shipping them, I guess you have to have the right procedures at the port to stop that, and China's going to have to be subject to that like anybody else.
Arnold, last view?
I think the brand owners are very aware. I think governments are watching as much as they can. I think where you've got developed customs, you can do something about it, but in Africa it would be very difficult.